Hello, friends. Thank you for coming online and watching this segment. Once again, today I have Sanjiv Gupta with us. He's a prominent certified public accountant located in Fremont, California. He's been practicing taxes for several years. Obviously, his office has been located in Fremont, but recently he has opened up another office in Sunnyvale. You can call his Fremont office if you have any questions related to taxes at 510 825-7563, 510-825-7563. You can use the same number to set up an appointment either in Fremont or Sunnyvale. He's also in plans to open up a couple other offices. Hopefully one in Dublin might be coming out soon, so look forward to that. But in the meanwhile, you can also make up a telephonic appointment if you can't meet with him in person. We also get a lot of people watching this show from India, so if you are located in India and watching this segment, you can definitely still consult with Sanjiv. He can consult with you over the phone, via Skype, on video conference. So just give his office a call and they will make all the arrangements for you. Once again, that number is 510-825-7563. Some of you might be wondering, why did I bring up this India topic today? Normally, I don't talk as much about people in India, but I wanted to bring this up because today's topic is about LIC policies, insurance policies in India. It's a big business. A lot of us have it. It's a necessity of life, obviously, and in India, they do very, very well. And oftentimes, these insurance policies are making good money. I mean, some of these policies pay anywhere between $2,000 to $10,000 a year in income, and then when you get rid of these policies, when you surrender these policies, there's a huge payment that can be collected by the beneficiary. So I wanted to bring these questions up. I'm pretty sure if you're watching this segment and you have insurance policy, you would want to know is how should you report this income? Many people who have this insurance policy probably are not reporting the income. So hopefully Sanjeev ji can answer those questions for us and tell us what's the proper way of dealing with taxes here in the United States.
First of all, Deepak ji, everybody, whoever the clients that come to my office, when I ask that question, do you have an insurance policy? Yeah, I have the insurance policy. Where is the policy? My father did it for me.
Of course.
That's the normal answer we get. So they're not sure what policy they have, what is their parents doing with that policy, what is the insight of the policy. Is it money growth? Is it growth policy? Is it tax deferred policy? Is it term policy? They have no idea about it. So we as US citizens, residents, we are under obligation to report all those things on our tax returns or forms. So we need to be educated about whatever we have investment, like in India, like LIC policy, for example. Of course, LIC gives a fair dividends as compared to US policies and other things, but again we have to take care of the currency risk fluctuations too. But again, definitely when we have a policy in India, let's say, I will not say LIC, the other policy, unit trust and all those other things are there. So let's say if you have an insurance policy in India, it's like a saving account. How? In saving account you deposit money and that gives generous interest.
Right.
Same thing with a policy, insurance policy. You deposit premium. That's money. You deposit money in an insurance policy. That is you pay premium. You deposit money in an insurance policy. The insurance company takes part of your money, pays towards the cost of the life insurance benefit, and the remainder they invest. So like you earn interest on that saving account, same thing you earn interest on the insurance policy as they grow. Some insurance policies, they are very good, like LIC is a very good, very acknowledged institutions and a very remarkable track record, a monopoly.
Huge in India.
Huge in India. So definitely the rate of return by LIC generates not much, but definitely good income. So over a period of time, that value gets reinvested into that policy, and there's a cash surrender value. It becomes a cash surrender value. What is cash surrender value? The difference between what you put in and what is the amount, is the total amount balance on that policy, which you can take out today. So that is cash surrender value. That is the amount that is available to you immediately. If you cancel that policy, of course you have to pay some surrender charges, but you will get that money there. Let's take an example. You put $1,000 every year for 20 years. So you invested $20,000. Now you want to surrender the policy. If you surrender policy, the cash surrender value, it says as per the policy is $30,000. Of course, they will take some fees and everything, the surrender charges. Let's say they give you net $29,000. So definitely there's an income of $19,000. You have to report that income on a tax return as ordinary income in the US, which people are not doing it. So beware of this thing. If you get any money from the policy that you surrendered because of cash surrender value component inside it, it's taxable in US.
Yeah, and I think one of the key reasons why people probably get confused is because in the United States, typically when you get paid from insurance, it's not taxable.
It's not taxable,
right?
but this is growth policy.
Right.
This is
so
not
people,
reimbursement.
But you don't really look at all that documentation.
Yes.
You just assume that insurance money is not taxable.
It's not taxable. But the scenario can change if you get that policy payment, cash surrender value payment, because you're ill, or you're so chronically ill, or you're terminating ill that you need that money. Of course, then you don't need to pay taxes. But that is the only exception to the rule. Now you have to report that insurance policy cash surrender value on your form F bar, that is TDF 90-22.1, and you have to report that policy on form 8938, which we talked about a lot of times. So you have to report that cash surrender value always on those forms, and if there's income that generates from when you take the money out, you have to report that gain as ordinary income on your tax returns.
So Sanjiv ji, like you started out the conversation, that a lot of time parents are the one who have bought this policy.
That's a great question.
Are the kids still on the hook for that?
No. So what happened is when the parents take the policy, they pay the premium.
Right.
So they pay the premium of the policy. When the parents pay the premium, it's like a gift to the kid, but the money actually is owned by the person. Okay. Not by the father. Father is just giving a premium from his own pocket.
The kids are still on the hook.
Kid is on the hook because the income is generating to the kid, not to the father. The father is paying the premium, is like giving a gift to the kid. So gift tax regulations are there in India, which is based upon the donee based, not the donor based. Donee based means the person who is receiving it. Since you are non-resident, you will not be paying any gift tax. But if you were a resident of India and you were receiving the gift from your parent, of course you still will be exempted because it's a close relationship. But if you're getting gift from your friend, definitely you have to pay the gift tax in India too. So you have to understand this. If your parent is paying the premium on your behalf, it's like a gift to you.
And Sanjiv ji, what about this these money that these insurance policies are accumulating on yearly basis?
That's cash surrender value.
That is the cash.
That is cash surrender value.
And this cash surrender value, a lot of time what I hear from people, and people even email us, this money, let's just say they got insurance policy and the policy is 5 years long or 10 years long, and you only make a premium for 5 years, and after that the premium gets paid on its own.
On its own. So what they do is they start using your accumulated balances and the dividend income that they generate every year to pay for the cost and everything.
So because that money is getting reinvested in the insurance, do we still need to report
Yes,
that?
because that increases the cash surrender value of the policy, and when you increase anything increases, you need to report on form 8938 and the form TDF 90-22.1. The taxability part comes only when you surrender that policy or when you get some money from the LIC.
So income needs to be reported.
Income needs to be
reported.
reported.
Once again, I'll go back to the question I asked you earlier, which is when there's an income, is there a limit how much income?
No, there's no limit in US. There's no limit. Even if you find $1 on the street, it's taxable.
Okay, so
there's no limitation.
No matter what
no
the
matter.
income is, you still need to report it.
Still need to report it.
Okay. Well, there you go, friends. I'm pretty sure he has clarified that for you, and I'm sure a lot of you are probably surprised to hear that, but that's the truth. So give Sanjiv ji a call if you have a question about your insurance policy. It's 510-825-7563, 510-825-7563. He can't review the policy for you, but he can definitely help you out with the tax part of it. So you can reach him once again, 510-825-7563. If you have basic documentation from India, that can be quite helpful, so you can kind of review it and let you know exactly what kind of tax treatment you should be aware of. If not, then maybe give your agent a call and just find out some basic details about the insurance policy, so that way he can make the best judgment call and kind of give you the best advice he possibly can. Like I told you in the beginning of the show, he has an office in Sunnyvale and Fremont now, so you can reach him at either one of those offices. You can call the same number, 510-825-7563, to set up the appointment, or you can simply visit online at sanjivcpa.com. On the home page, there is a contact form. Fill out a little message there, and his assistant will give you a call to set up an appointment. But thank you so much for watching this show. If you have a question, anything related to taxes, whether it's about your personal taxes or business taxes, shoot us an email or send us a little message online, and we'll try to bring your questions on air. I know a lot of you guys call in onto a radio show to get your questions answered, but please do email us. I'm pretty sure you like these videos better, and you definitely like more detailed answer when we write them in a blog post, because I see tons of you guys are reading it. So thank you so much for giving us so much praise and helping us out with this. Once again, my name is Deepak, and our guest here is Sanjiv Gupta. He's a prominent certified public accountant located in Fremont and Sunnyvale. Well, thank you so much, guys, and we'll catch you next week. Till then, goodbye.